Canada Enterprises, abbreviated to BCE stock. The ticker symbol is BCE. This is a communications company based in Canada, providing wireless and fibre networks. Currently costs $38 per share. It pays 4 dividends per year, and the current dividend is for 96.75 cents per share. That's a dividend yield around 7%. The dividend payout ratio at the moment for BCE is 70%. The next ex-dividend date is the 14th of December of this year to pay out on the 15th of January of next year. Now, depending on where you look, the consecutive dividend payments and the consecutive dividend raises seem to differ, but that's because the company itself used to be known as Bell Telephone Company of Canada when it was founded in 1880, and in 1983 it became BCE along with all of the other companies under the one name. But this company has been paying a dividend since it was founded, so it's paid consecutive dividends for the last 142 years in a row. It's also a Canadian Dividend Aristocrat, and again, depending on the sources you look at, they've raised their dividend since the fourth quarter of 2008. So they have a long history of paying dividends, and they have a good history of raising the dividend. I started my position on the 25th of February of 2022, and I'm currently about 8% down. So it's quite a big company, it has 44,500 employees, and the company operates through one segment, which is Bell Communication and Technology Services. And this provides a range of communication products and services to consumers, businesses and government customers across Canada. The current value of BCE stock on the stock market is $48.5 billion. Its price to earnings ratio is 15.98, and from what I could see, the average price to earnings ratio for the Canadian communications sector is 17.7. So according to this metric, it is at a good price. The current revenue of BCE is $24.17 billion, and their profit margin is 11.86% over the last year. Over the last quarter, it's about the same, 11.3%. They have a healthy earnings per share of $3.32 and a nice dividend yield of 7.3%. The debt to assets ratio of BCE stock is not great, but not the worst. It's about 68% over the last year, and over the last quarter it's gone up a little bit to 70%. So they have about $70 billion in assets and close to $50 billion in liabilities. And BCE's annual cash flow from operating is about $8.32 billion, from investing is negative $5.52 billion, and from financing is negative $2.99 billion. Now, when we look at the 6-month graph of BCE, it does look quite scary. It's down about 18.5%, but when we look at the full history, we get a much clearer picture. It's a very interesting long-term graph. So as I said before, the original company was founded in 1880, but then all of the separate companies underneath the Bell Telephone Company of Canada name were consolidated into one and became Bell Canada Enterprises in 1983, which is right here on the graph. So we get the full history here from that point. And this big spike and corresponding drop is the dot-com bubble. So as you can imagine, if you're a company that sells fiber and wireless communications and the whole world is going mad about the internet and everything being .com, companies who had no earnings and terrible profits, sometimes no profits at all, would put .com at the end of their website or their name and they'd explode in value, which is what we see here. And this tiny little drop here in comparison is the 2008 financial crisis. So you can see the difference in effect that each of those massive cataclysmic events had in comparison to each other. Crazy high valuation at the peak in 2000, $136 a share, and in the same year dropped down to $27 a share. But as I said, although the graph, when you look at it in say Trading 212 or some of the investing apps, it can look a bit scarier than it actually is in reality. This to me looks like a great time to get in. So the cheapest this stock has been in the last year is $36.15, which is its 52-week low, and we're currently at $38.67. So it's getting close to the cheapest it's been in a year. So if you're in the dividend game for the long run, this is definitely a stock to consider. And as I said, the dividend histories vary from place to place, but this website, Dividend Max, goes back to 2012, and I've seen other sources say that they've raised the dividend since 2008. But as you can see here, they do like raising the dividends. They have a long history of paying them, and they have a good history of raising them. This is where we are now, 96.75 cents per share, 4 times a year. Very nice yield. So to wrap it up, quick and painful, Bell Canada Enterprises, ticker symbol on the stock market is BCE, $38 per share, pays a current dividend yield of 7.3%, and it pays 4 dividends per year. The next deadline to receive the dividend on the 15th of January, which is also known as the ex-dividend date, is the 14th of December. BCE has not missed a dividend payment for the last 142 years, and they have a nice history of raising the dividend. I wouldn't call it a very popular stock, but it certainly flies under the radar. It doesn't get as much credit as it should for how good it is. But anyway, that's all for this one, and let me know what you think about BCE stock.